Supreme Court day on this recording. So a big move up because the Supreme Court said, nope, you can't do all these tariffs. But there's a lot of sifting through what that means. And what I was just telling people before I hit the record button is don't listen to Fox Business or MSNBC or CNBC or Bloomberg that have political spins on what this means. You got to get into people who know markets, not economists either. They don't know markets. What does it mean? The impulse was the upside because less tariffs, less inflation. There's always the worry around these tariffs. I thought no tariffs, because they've been put on, would create a lot of uncertainty. But apparently, we rallied from 85 in this S&P March contract all the way up to the upper 25s, and they've held on to most of that strength. Now, before that, I want to show an example. Right after the open, we had a green to red moment. What does that mean? Well, take a look right here. All right. It's got these green lines or lasers. It's got this line. This line here is this line. Whatever this line is, all is going to be the last bar or footprint. And it just means there's more longs than shorts. But if you play it out, there's 88 contracts long, 43, 38 short, 115 long, 38 short. That's what these raw numbers mean. You'd see in here. But watch this flip. They tighten up right there. It's like 3-1 to 2-1. And then they flip right there and go green to red. That's bullish when it tightens up like that. Now it goes 2-1 longs over. Okay. That's bearish. So right before this pop, little bullish, flip back. That's bearish. It's going to squeeze again and flip for like a couple bars too. Let me fast forward this damn thing. Right here. You see it tighten up right there, 59.68, and then go up. But look at this. This has to get you to scratch your head if you're bearish or short. If you're bearish, it means you're looking to get short. If you're short, it means you're looking for price to go down. I hope. But if there's more shorts than longs, that means you have too much competition potentially. You don't want a lot of people short with you. It's like going into a bar, and what happens? If you like women and you go into a bar and you're single and you're looking for a woman, there's nothing but guys in there. No, you're in the wrong bar. You're in the wrong location. So you don't want a lot of shorts. If you're short, and if you see this damn thing, it goes from green to red, which means more longs than shorts to more shorts than longs. It's not coincidental that the market rallies from here. This was predictable, either to keep you off the wrong side and or get you on the right side. Now, I'm going to fast forward to about 8:39 and went red to green. It went the other way. Is that up here? I wrote down the wrong time, I think. You know what? Let's just go to when the Supreme Court came out right at 9 o'clock. What was interesting about the Supreme Court is we knew it wasn't going to be right at 9 o'clock, and it was tentative as to whether or not they were going to come out with this decision. And right here, bam. Take a look at all the shorts that they trap on the way up. Couple big shorts right there, and then all the way up, more and more shorts up to 155 right there. Because guess why? Or guess what? Guess why that happens? If the price goes up, it's lifting offers, right? So it's probably getting people stuck short that leave an offer in the book to get short. And then the market spikes or holy shit, I'm short. And generally, you don't want to be if you say holy shit in front of it. You don't want to be long if you say holy shit, I'm long, or you don't want to be short if you say holy shit, I'm short. Because you're probably underwater immediately. Watch what happens right near the top. Come on. I can't get this thing to. we get, that's not it. Oh, that's why. Okay, here we go. Look at the amount of shorts, 225 to 82. You got to be careful about getting long, even though I know at this point this is the high. But even after a 40, 50 point, if you haven't gotten long and it's rallied 40 or 50 points, you got to be careful of getting long because you're reaching. It's like putting a ladder on top of a picnic table and picking fruit off a tree. It's just there's more risk when you do that. So if you watch this and you see the amount of shorts, you get this thing to start to come back in with the amount of shorts. So it was like 225 when it was at its high. It's down to 190 right now, but it is lower. And so when you start to see this come in, it could get you from not being super bullish and getting your ass kicked. You see how these numbers, they came in and the market went sideways to lower? Let me back it up. Where was it? Where was that jump? Might be right in here. Watch these two raw numbers, 153, 110. These two numbers right in here. You see when they tighten up, when they were 150, 110, and there was some downside left? That means longs are coming in. When longs come in, they're the reachers. They're the ones on the picnic table with a ladder reaching on their tippy toes on the last rung. You know where it says the last rung, do not step above this rung? Well, when you're desperate, you step on that rung and you're on a picnic table, you're picking fruit and you fall. So you have to understand your risk if you're going to do that. That's people who buy it. You see the laser switching? It's now green. People who buy it late, they reach. And you don't want to be long with other longs or short with other shorts. That's the key about OPP, other people's position. It's not coincidental that it started getting weak once our OPP tightened up.